probability trading strategy, you're full of crap.
Things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
All right. Well, like we said there, you got to learn how to drive the beater before you can learn how to drive that Lamborghini. Hey, guys, have you ever felt like there's an invisible wall keeping you from success? You know you're capable of in trading, but it's just holding you back. What if I told you that wall isn't the market, but it's actually your beliefs that are holding you back, or that you're holding on to it, and that's holding you back from success? Today, Mike and I are going to show you how to break through and take action steps, some really solid action steps on your trading journey. So, good morning. I'm Dennis Wilburn, or good afternoon, depending on where you're in from. I'm Dennis Wilburn, the creator of AutoPilot Trading. Joining me is Mike Lamont, founder of Mara Wealth. So,
Hello,
Mike, did you realize that we have about 50 years worth of trading experience between the two of us?
It makes me feel old.
Makes you feel old.
Yeah, that's a lot of experience. Yeah,
And so,
a lot
yeah,
of experience, and probably made more mistakes than more people than more than you can count.
yeah, you're absolutely right. And the cool thing that's really cool about what we're going to be talking about today is how to assess those mistakes. We're approaching the end of 2024, getting ready to go into 2025. Well, part of the deal whenever I would go out and fly on a mission, whether we were going out to bomb a ridgeline or whatever, we would always come back to the ship, and then we would debrief the flight, right? We would, what was good, what was bad, joking with people about, what they did wrong and what they did right. Matter of fact, one time we were out there flying, and a buddy of mine, we would carry these pods underneath the airplane that would hold like 500 gallons of jet fuel, right? There was additional jet fuel, so to improve how much we could fly. And my buddy was out there, and he thought he was dropping his bombs, but he actually pickled and dropped his drop tanks with the gas in it.
Oh, no.
And it went ploosh down on the ridge line and all that kind of stuff. And wow. And so he basically came up with a new nickname. They called him Slick from there on, because slick is the definition of what happens when your airplane is slick. You're not carrying any bombs, you're not carrying any pods or anything like that. So we just called him Slick, and so that was kind of interesting. But I tell you, everybody, that story, because we're going to be talking today about how to assess what you've been doing so far this year, and then bring it into how you can start setting up your winning process going into next year. So, like I said, today we're going to talk about your beliefs, and how they shape your trading results. And then Mike's going to be covering a 4-step framework that he uses very successfully. So, Mike, how's your trading been? And we were talking a little bit about, your trading's, you're up about 200%. You're trading some options, trading some stocks and ETFs and all that type of thing, which is really great. What's the big one big takeaway you have for this year?
I think that the big takeaway is to allow myself to synthesize everything that I've learned up to this point.
Okay.
And to that, like, the thing that I feel, the belief that I had that held me back for a very long time was that I wanted to be able to teach in real time what I'm doing, why I'm doing it. And so when I would place a trade, I would want to give out the full plan ahead of time for
Okay.
every trade that I do. And I still do that for my main account. And the main account is up 25% in the last quarter.
Right.
But by being able to trade what I see in real time and manage it. And that's the more important thing too. It's less about the entry and it's more about the management thereafter.
Right on.
Be able to have a certain feel of, okay, this is under heavy accumulation. I'm going to hold this a little bit longer. Or, you know what? It's starting to stall out. Let me take the gains off here. This just had a very sharp pullback to a key moving average or a key support level. This might create an opportune high reward, low risk where you could get in for pennies kind of risk,
Okay. Sure.
have potential upside that's a few dollars. That's what I'm talking about. And that's the realization that I had at about the 6-month mark. Started to execute more at around the fourth quarter. And that's where it looks like a giant hockey stick for the equity curve. I shared this on X the other day. I don't know if I could bring up my that post, but let me
If you
see
can
if I
find
can
it.
find it and then share the screen because sometimes you see what's going on here. Yeah, there it is. Let me share the screen. Sometimes I do a double take with this stuff myself. And let's see,
Here we
where is
go.
it? It's right here.
Can you share it?
Yeah, it's
I just have to pop it up there. There you go.
yeah. So I posted that last week. It's up a little bit more now, up 189%. I ended up selling the last bit of my TSLL calls.
Right.
That Tesla looks fantastic right now, in my opinion.
Yeah.
Since I was trading calls, to let that potentially slip back because the price action is so extended at this point where if I'm trading shares and I'm still trading my Tesla shares, I'm willing to give that more wiggle room. But
Sure.
for the calls, since you also have that time decay, I'm less willing to give it that wiggle room. So I wanted to just lock it in, nail down the profits, and buy some more Christmas presents for people.
I understand that, because Christmas is coming up and all that type of thing. The one of the things that we want to be also looking at is I'm going to take your screen down for a second.
Yeah.
If that's okay. Let's pop back to just the two of us. Just the two of us. Da, da, da.
If we can make it if we try.
There we go. Let me slide over here. There we go. There we go. So
All right.
one of the things, because I bought TSLL back when it was $11.50. Okay, and it's like pushing. What's it pushing today? TSLL.
It's pushing 37 right now.
37. So I bought it at $11.50 earlier in the back end. Gosh, I want to say back in the August time frame, and it's taken off like a rocket ship. We talked about that before.
And you know what? Before we go further, thank you, Dennis, because I didn't even know that this existed.
That's okay.
Yeah, so it's thank you for turning me on to TSLL. That's been a huge reason for that crazy return this year.
And TSLL. And so one of the things that I'm doing with it is my base holding of TSLL is up about a little bit over 200%, 240% or so. But what I've been doing is, I've only got a few hundred shares. I'm not trying to, to go nuts on it. Clearly it represents, less than 10% of my holdings. But what I'm having fun doing right now is I'm selling covered calls against it every week. And I'll generate on, a couple of hundred shares. I'm generating, $300, $400, $500 per week in covered calls, which works out really well. And
Wow.
so one of the things I want to just share with everybody the returns that Mike and I are talking about on these particular accounts that we're doing really well on this year are they are uh, you know partly due to trading options on them. And so there is a lot of upside potential with your options, but there's also downside potential. So one of the things I like to encourage people to do, Mike, is that learn how to be a winner trading stocks and ETFs first,
Right.
then take your strategy or your system, because your system should work really well with with options. Take that over and then start trading options with it there. And so
Sure, it would be like somebody there that's brand new to flying, and they want to fly the fighter jet right off the hop. Is that where you
exactly.
started? Did you
No.
start with the fighter jet, or did they give you something before that when you were learning?
Yeah, I started off with what's called the old T-28. Was one of the last World War II training aircrafts that was still
Wow.
around, and it was wild because it was the old radial engine, and so when you turn it on, when you crank it up, it would blow smoke back, and you had to have the cockpit open, so it was like really a
Oh
throwback
man.
type of experience. And but wow, that was a beast. It generated 1,400 horsepower,
Wow.
and so yeah, no, but I wound up flying the A7, which is a really great little single seat jet later on. But no, it took 2.5 years before we went from basic to advanced. And a
Mhm.
lot of times it's very similar to what we do with our trading. So, hey, Caleb
Right.
says
That's
he
what
this
people should do with trading
Caleb
options, right?
says that Jamaica was nice. Now it's time to get back to the real world of trading again. Welcome back, Caleb. And so, well, Mike, let's talk a little bit about the major trading myths that may be holding traders back. I'm currently reading a book by Dr. Nick Hall, and it's about change your beliefs, change your life.
Okay.
And we talk about this on a regular basis. We talk about debunking market myths. And in reality, what we're talking about is what people believe about the market.
Mhm.
And some of these are um, I think part of it is what we believe can oftentimes shelter us from actions, or I won't say protect, but they'll keep us away. They form an excuse for not taking the actions that we need to take to become a better trader. And what I find that is connected to is changing the way we believe. And like one of the myths that is really out there is successful trading is all about finding the perfect system. What's your thoughts about that?
Yeah, I think I don't know if there's a perfect system. If there is a perfect system, write in, tell us what
Yeah.
the system is, because I don't think that I found a perfect system yet. But I think that you could find one that fits you and your personality and your
Okay.
objectives and your beliefs. And
Okay.
I think that you need those three things. Your system has to fit your beliefs, your goals, and your ability to execute. Any one of those three missing, and you're going off the rails in a hurry,
Yeah. Now, when you
because
say,
you can't execute what you don't believe in,
oh
right?
yeah,
Well,
without a doubt.
yeah, here's this 200%, almost 200% return on the year. I tell you exactly what I did, how I did it, why I did it. But you think, you
Sure.
know what, that Mike guy here, he's has a few screws loose. I don't believe a word this guy has to say. You're not going to be able to execute it, even though here's the step-by-step plan,
Yeah. Yeah.
right?
Yeah.
Same thing if you can't execute it, yeah, right? So people that you're working and you have weird hours, and part of how I was able to do that was being in front of my screen some of the time. Not I'm not glued to my screen by any means, but for the trades that I am taking, that I'm finding where prices pulling back to a support level, bouncing off of it. Like
Sure.
some of those, you've got to be Johnny on the spot. So
Yeah.
are you able to execute? And
Yeah.
then finally, the last part of it, is it meeting your goals? Well, if the system is not meeting your goals, then, well, what are we doing here?
Yeah. And when you talk about meeting goals, sometimes we got to be very careful about defining goals, with
That's
regarding
true too.
trading. Because if I define my goals simply in a certain dollar amount, um, I have very limited control over the dollar amount that I gain or
Mm,
lose from it. Well, I have very limited control over what happens after I place the trade. The market's going to do what the market's going to do. And therefore, I build in guardrails to one, protect me to the downside, but then
okay.
also allow me to take profits at measured places so that I'm taking out some of my profits on strength, like
Hmm.
the TSLL trade. I sold, half the position when it was up 100%. And therefore, what I'm trading now is basically the house's money, and continuing on with that. Uh, and then also, I think basically we need to have a system. Your system defines all your rules, all how you're going to execute the whole 9 yards. You can go through that and imagine or game plan that in your mind, so to basically then step into, well, here's my system, you know, what's my strategy, and then what tactics will I use for that strategy, and learning how to, one of the biggest things that this aspect of finding a perfect system is there is no such thing as a perfect system. And oftentimes people go out there and start searching for the holy grail. Why do they search for the holy grail? I'm going to say that primarily a lot of it stems back to lacking the discipline and the consistency to learn a system and the functionality of the system. And so, uh, which is hard work. That's hard work. And I would
Hmm.
say that most of the time, people who look for the Holy Grail are not only looking for the Holy Grail in trading, they're also looking for the Holy Grail of how to live the easy life. Is that too
Hmm.
stern? What you
Well, well, one of the things I like about this show is that we tell people what they need to hear, not necessarily what they want to hear.
Ooh, yeah. Yeah, we do. We do.
And that is a hard truth. Yeah, there is going to be work involved, um, but at the same time, right? It's knowing the right kind of things to work on.
Okay. Yeah. And we're gonna get into some of that, I think, as we get into your
Oh,
review
sure.
process, right?
Yeah,
Now,
that ties right in.
yeah, I mean, knowing the things to work on, because part of the I'm gonna make a statement here, and you can tell me if I'm full of it or not, is part of learning how to be a great trader is learning how to be a good loser.
All right, tell us more.
Okay, well, good loser. One, you're going to recognize that with any system, you're going to probably have somewhere between a 55 to maybe 50 to 65% win loss ratio. So
Okay.
what does that translate to? Well, that means that 35 or more percent of the time you're going to have a losing trade. And if my beliefs are about losing are so strong and that I just I can't stand to be a loser, then I'm going to be putting myself through great mental anguish, and then setting up some bias type trades that will basically I'll self-destruct on my trades because, well, I can't stand to be a loser. And so when the losing trade happens, I beat myself up about it when in some cases I should be celebrating that loss because I followed my system perfectly.
Yeah, I agree with a lot of what you said. In that example, it almost sounds like uh, this person would be identifying themselves with their trades, with their.
Oh yeah.
So my identity is based on whether this trade wins or this trade loses, but it actually has nothing to do with you at all. If you're able to uh, divorce yourself from each trade, then it's you're more of the system manager. You're more of the referee. You
Oh
place
yeah.
this trade, or this trade comes in, and it fits your criteria. It's able to stay in the game so long as it doesn't break the rules.
Yeah.
You
Exactly.
set the rules, so you're the referee. It's not you. It's this thing that's the performer.
Right. Exactly. Yeah. I mean, as you said, it's almost like we're a monitor. We monitor what's going on. I think Mark Douglas covered that in his book Trading in the Zone, and then the Disciplined Trader, is that he talks about that aspect of just learn how to observe without without any emotional response. Just learn that the market's going to do what the market's going to do. We have to be okay with that. And
Mhm.
so, what about that aspect, that myth about trading is just too hard for me?
Trading is too hard for you.
No, that
What do you
the
mean?
myth. What about the myth? Trading is just too hard for me. This belief is created by a lot of self doubt, and many traders don't realize success comes from small, consistent wins and removing complexity from their trading.
I think that if you have that belief that trading is too hard for me, it becomes a self-fulfilling prophecy.
Ah, in what way?
Well, if I believe that trading's too hard, then it's that'll lead to self-sabotage,
Okay.
right? Because if trading is too hard, are you really going to do the work in order to be successful?
Mm, mm.
Are you going to be willing to put in the work to be successful consistently, not just over one trade or 10 trades, but over the course of several months, several years?
Oh yeah, yeah.
Probably not if you think that trading is too hard.
Oh yeah.
So that's how it becomes a self-fulfilling prophecy. Oh, I can't lose weight. Well, is that person going to hit the gym? Is that person going to start eating right? Well, no, I'm big boned.
Oh yeah. That's interesting. That's interesting that you would say that. It almost sounds like that by saying out loud that trading is too hard for me, almost is like an excuse to either quit or an excuse to, well, I have to find something more simple, or just
Oh, and it's
a,
not even a judgment, right? People could believe whatever they want to believe. It's just that if you're holding that belief that trading is too hard, then this isn't the game for you,
oh, I agree.
right?
Yeah.
Unless if you decide that, oh well, I've been listening to Dennis and Mike, and maybe trading isn't as difficult as I thought. Maybe I just need to change a couple of my beliefs. Maybe I need a system that leads me in the direction that I want to go.
Yeah.
And then you start to down that path.
Well, I
But
know,
if
like,
you want to hold on to a belief that says that trading's too hard, then no, there's other ways to make money.
and that's one of the things that I talk about with autopilot trading. I offer it as a, and I emphasize that as I was developing the system, is I wanted to have a clear and simple approach to trading success. With
Mhm.
emphasis on clear and simple. I took away part of that away from Mark Minervini's book, where he talks about have one setup, or maybe two setups. Mark Douglas's set, where he said focus on one setup until you've mastered that, and that what that calls for is to be patient and be prepared. That's, I think, a motto people should write down. Be
Mhm.
patient and be prepared, and then take action. Now, you sometimes are watching the market and not making decisions during the market, but you've identified where you want to make decisions at. I do the same thing. I then utilize my conditional orders so that I've taken my emotional quotient out of the picture. I
Mm.
basically say, okay, if prices get to there, yes, I want to be a buyer. If prices get below that really, certain amount, I want to be a seller. I want to get the heck out of Dodge. But if it bounces back up to 10%, 15%, 20%, I want to be a seller also, but selling on the profit side of the equation. And as long as I'm making that 2 to 1 or 3 to 1 reward risk, guess what? I run a very successful system, and I've done so for the last 13 plus years, 13 years, in beating the S&P every year with and averaging about 37% per year. So
Yeah,
so
that's
more
fantastic. I'll take that every day and twice on Sunday.
I know that's the body of work. Like the body of work, I think, is important that people share what their body of work is, or you should, be, if you're thinking about doing business with, or, getting into business with, somebody, like Mike and myself, ask us what our body of work, how have you done in the past? And so the next myth is basically, before we get into the answers to your, some of your question, guys, is more trades equal more profits. That's something that people sometimes believe. Well, if I just trade more, it's going to improve my probability of making more money or making more profits. Now, how dumb is that? I mean, excuse me.
Well, that I don't know if it's dumb or not, but that's kind of the opposite of how my system works. And the it's funny. For the last quarter and the last half, there's less trades than there were in the beginning of the year.
Okay.
And the performance for the second half and the last quarter is better than it's been all year. So
Okay.
what's the difference? The difference is sizing.
Ah,
You want to be
good.
sized in the trades that are your A plus trades.
Right on.
Because
Okay.
if you're not, if you have an A plus trade and you're not sized well in it, then you could have a 50% winner, 100% winner, and it doesn't move the needle enough.
Right on. Yeah.
Well, we want to be over leveraged in our great trades and moderately sized in anything else.
Yep. Yep. So that's one of one of the lessons you've learned as you've gone back and done your analysis and your evaluations, right? And
Yeah.
we're going to be talking about your 4-step framework for doing that. Um, so speaking of that, we're going to be jumping into that right now. So, uh, so speaking of refining strategies, the next step is figuring out what's working and what's not working. And so let's break it down. Mike, how about walking us through your 4-step framework for doing those analysis? And why is it important for us to talk about it now? It's because we're approaching the end of 2024. Don't be the person who gets to the first week in 2025 and goes, oh, gee, I think I should go, look at what I did last year. Be proactive and do it now, because
Yeah,
that way you
absolutely.
can have your strategy and tactics in place. And so when 2025 gets here, you've already pushed your go button and you're ready to rock and roll. So go ahead, Mike.
Yeah, so the step one is going to be gathering your data. So if you've been keeping a journal all year, fantastic. That's wonderful. You're ready ahead of the game. For those of you that have not started journaling yet, that's okay. Here's where you start. Go and download all the transactions that you've had for the whole year. You should be able to do that from any broker. Download it to an Excel file, download it to CSV, and then from there, what you're going to want to do is sort it by performance. So you're going to have your winners at the top, your losers all the way at the bottom. And you're going to want to look at your top 10 biggest winners, your top 10 biggest losers. Yes, you can look at everything, but start there, because it's in these outliers that you're going to be able to start to figure out, well, what's the things that went really well and what are the things that really didn't. And
Sure.
so that's going to be your step one. Download your data and sort it by biggest winners versus your biggest losers. On to step two. When you're looking at your top 10 biggest winners and your top 10 biggest losers, you're going to want to look for, well, what are the common factors here? What was common about my best trades of the year? Were they taken at a certain time? Was it a certain kind of setup?
Okay.
Was it a certain kind of market condition, a certain sector, a certain asset class? Maybe you were sized in a certain way. What was common among the biggest winners? And then do the same thing with the losers.
Okay.
Find those mistakes that keep on happening again and again and again. And then after that, your step three, you're going to have your three biggest takeaways from each, from the winners, from the losers. And that's going to be your framework to say, okay, I want to do more of this, less of that.
Okay.
And are there other things that you could be doing? Sure. But if we overload our plate, then all you get is a stomach ache. Right?
What do you mean? What do you mean? What do you mean? Overload your plate. Overload your plate. Excuse me.
Well, if we're starting out with, okay, here's three big things that I'm going to focus on to do more of. Here's three things that I'm going to do less of. If we start to come up with, okay, here are 10 things I want to do. Here's 20 things that I want to avoid. It starts to get unruly. It goes back to that same principle of, well, here's why I want to have my trading rules on an index card. We want to keep it simple, right? So it's a lot easier to focus on doing three of these things and avoiding these three things.
Right on.
And then once that becomes habit, and we'll get into that in step 4, once those things become habit, then we could work on improving the next couple of things.
Okay. And so, cool. Okay. Got it.
So the last part of it is coming up with a routine for our post-analysis. Coming up with these three things that we're going to focus on and the three things that we're going to avoid. Put it in front of your face, so that way you're seeing it all the time. What I like to do when there's something that I want to make sure that is top of mind, I'll put it as the screen, as the wallpaper on my phone. How many times do we look at our phone every day?
Too many.
Yeah, too many. Probably a couple of hundred times. I'm probably looking at my phone a couple of hundred times during the day.
Yeah.
And the first thing that I see is that wallpaper. So every time that I look at that wallpaper, whatever I want to be top of mind is in my face. And so even if I'm just glancing at it, subconsciously I'm being reminded of it. You also want to have stickies somewhere. I like to use stickies. I like to also put it in my calendar.
Okay.
So if you're committing to journaling, block out the time on your calendar. Do that ahead of time. We're talking about planning for 2025. Block out, okay, here's when I'm going to do my monthly analysis. Here's when I'm going to do my quarterly analysis, my semi-annual analysis, and my annual analysis. Have that time blocked out so that way you're already planning ahead.
So gee, Mike, this sounds almost like we should have a business plan for our trading. I mean, it sounds, that sort of sounds like to me. And I know
absolutely.
And I know you've written a really good little book about that's available. What's the name of the book about the business plan that you have available?
It's called the Trading Success Blueprint, and I'll go grab the link for us here. Didn't know that you were going to bring that up, but
well,
yeah,
I'm just full of surprises today.
So this is the Trading Success Blueprint, and it teaches you how to write a business plan for your trading, and it's done from the perspective of walking you through step by step. Like, you don't need to be a business person in order to write a business plan for your trading, But
Right on.
if you do want to have consistent success with your trading, if you do want it to generate money consistently, then you should have a plan that goes beyond, well, I'm going to enter here and exit there and take my profits here. That's wonderful. You need that. I look at that as a trading plan. A business plan is going to go several layers deeper than that. What kind of assets are you going to trade? What kind of market environments are you going to trade? What kind of setups are you going to look for? What's prompting you to take an action? How are you
Right
going
on.
to scale out of a trade? What's your emergency plan if your broker goes down, or
Right.
if the power goes out? Think through
Yeah.
all that kind of stuff, and have that in your business plan. So
No, that's awesome. That aspect. And so, did we? So why? Okay, did you get through your add your post analysis into your routine? You did, right?
yes, I did.
Okay. Well, let's talk about this really quickly about reviewing both winners and losers. I think one of the things I know, because I like to journal, as you know,
Mhm.
I've been journaling. I I journal my own life. I mean, I journal life. Yeah.
Sure.
And one of the cool things about journaling happened to us is uh, I journaled when a long time ago, like gosh, almost 40 plus years ago, I went through alcohol rehab, and they taught us how to start journaling there, journaling your emotions, journaling what's going on in your day, and all that kind of stuff. And I found it very valuable to do that. But what's really interesting is one of my sons got a hold of my journals that I had done over the years, and
Really?
they
Okay.
and they started reading them and started better understanding me as the dad and what made me tick.
Mhm.
And it explained to them a lot of why I was the way I was when they were, small children, very small
Mhm.
children, because basically I got sober before before uh, uh, one of them was only like 2 years old, the other one was 4, but there was still some damage done there because of my actions. But my youngest son got the journals and started reading through them, and after I had basically rededicated my life to Christ, was what changed and turned things around, right, big time. But I had to go through the process of recovery too, because that was baggage I carried into that relationship. But my son read those and basically came away with a better appreciation of who dad was and why dad was the way he was, and the progress dad had been making over the years to become a loving, caring, better dad, if you will.
Mhm.
And so I tell you that story simply because to relate it back to this aspect of journaling for your trading is you can look back on that over time. And let's say you journal for the year, you can look back on it and highlight on a weekly, monthly basis both your mistakes and your your wins and your losses, if you will, your mistakes and the things that you did well, and a pattern will start to emerge.
Mhm.
Like for me, my pattern started emerging that I was so resistant to using stop losses when I first started trading and first started journaling that I wound up blowing up 2 accounts because I was so dadgum stubborn in my egotistical way of looking at the market thinking, how can I be wrong? I'm too brilliant not to be wrong.
Mhm.
That didn't work very well, as you can imagine. But I was able to then take that, and it took me about 5 plus years to get through that. And then I started refining my rules down to one page, simplifying, clarifying, uh, uh, and make them that where anybody, no matter how busy they are, no matter how where they're what they're doing work wise, not going to, they can apply the rules. And so that's one of the things that is important about journaling. And so as you say there, winners reveal what works, strategy setups and that you want to replicate, and losers uncover what to avoid, emotional mistakes, bad setups, or poor risk management. What's one strategy or setup that you have found from your analysis that you kind of like made it your own and you keep going back to that one setup?
Well, it starts with being in the kind of stocks that have the ability to move very, very rapidly.
Okay.
So I don't want to trade anything that just happens to be setting up in a pattern. It has to pass certain other criteria first. So some of the criteria that it's passing, I came up with an acronym for it. I call it EAGLE. It's similar to CAN SLIM, but I'm looking for earnings or sales or projections. So
Okay.
that way, like O'Neill would look for earnings and sales. I'm happy to have at least one of those three, but I want it to be off the charts. So I'm screening for those kinds of things first, and then I'm looking for the patterns.
Okay.
And I want it to be, of course, something to be a game changer about it, something that's a leader in its industry group, to be in a leading industry group, those kinds of things, to have the market with it.
Right. Okay.
So once it fits all of that criteria, the thing that's worked best for me is the VCP, Mark Minervini's volatility contraction pattern. That's
Okay.
a really strong pattern where you're on the left side of the base, you're volatile, then you start to wring the towel out, if you will, and it gets tighter and tighter and tighter. And then on the far right side of the chart, you have this little tiny area where price pops out. It has the potential to go, but if
Yeah.
it falls through the floor, you're only risking that much. So
Exactly.
that's what creates that asymmetric reward to risk. And my win rate is about 50%. It might even be about 45% on the year.
Okay.
But if I'm risking this much and my wins are this much, that works out over time.
Yeah. Right on. So yeah, I agree with that wholeheartedly. And one thing that what's really interesting is Mark has that trigger or that setup and trigger, and what I utilize, self-developed, of course, is my precision entry point routine. But it's basically taking a look at three things. It's looking at support, uh, and momentum. As momentum shifted back up to the upside, and I use the TSI. And then am I breaking out above, breaking out or looking like do I have a bullish candlestick reversal candle? Uh, and also it may have broken out above the 8-day moving average. Those are my triggers to actually get into the potential trade. But I
Mhm.
do the same thing as you. Is what I'll do is I'll look at a chart, and the chart may look beautiful from a technical standpoint,
Mhm.
great setups and all that kind of stuff. However, I'm also throw in there, if it's going to take off, what is its typical average runs per week? And I
Mm.
would like to see that the average run would per week is at least 10% or more when it
Okay.
swings up. Because if it's only at 2.5, 3, 4, 5%, okay, that's not going to get me to where I want to be for the year from a compounding standpoint. And that's one of the reasons why I trade the leverage ETFs,
Mhm.
is because they have demonstrated over the years that they will compound about 4 to 6 times per year, and typically compound at about 15 to 25%. You get a 15 to 25% run. And that's just taking out the middle part of it, not the full run. And if you do that 6 times a year at 20%, you've guaranteed yourself a greater than 100% return on that particular entity. And that, like I said, that's the beauty of dynamic compounding. So that's one of how I, have reviewed my winners and all that kind of stuff, and that's what I found. So, what about the situation on the losing side? Give us an example of one thing that basically you've uncovered that you want to avoid.
Oh, sure. So the something that I noticed on my losing trades, and there was one trade on the year that gapped down against me, that I got an 11% loss on the trade. Aside from that one, my average loss was about 4% for the losers,
Okay.
which I think is great. Most of my losses are even smaller than that. But the thing that I found that was in common with the trades that didn't go my way were that the moving averages were fanned out when I took them, meaning that there was some distance between the 5 and the 10 EMA and the 10 and the 21 EMA. Not
Okay.
all the time, but sometimes like those didn't have enough mojo to get up and out.
Right on.
So
Okay.
in mid-year, here's where I made the shift again. I started using alerts on some trades. So if a trade had multiple layers of confluence, meaning that there's multiple things stacked up for the entry and multiple things stacked up for the stop loss, those are the ones that I'm willing to place the working order for, where I'm placing the OCO order, one cancels the other, and it just place the trade, step away. If it triggers, it triggers.
Right on.
For the ones that lack that, but had lots of other great things going for it, could potentially be a strong breakout, lots of momentum in it, but it lacked the support. Those ones, I started to place an alert where I would look to enter, and I would wait for the alert to trigger, and I would see, how is it triggering the alert? Is it breaking through it on volume? Did it start just below it in the middle of the day and pop through it? Did it gap above?
Yeah.
And based on how it's breaking out, I would then in real time make the decision, okay, do I want to get in now? Do I want to wait? What do I want to do here? And
Right.
that's one of the other things that turbocharged my second half of the year.
Gotcha. So, yeah, I think that the middle part of the year was really a challenge for, not a challenge, but uh, I was right on track, right on time with my projected, because I try to target 40% per year. That's my target for the year for just
Mhm.
stocks, not options, but stocks and ETFs. And normally, on average, 37%, that's pretty close. And so I'm pretty pleased with that. Uh, but what I noticed was I was getting in too early,
Mhm.
earlier in the year, and it was when the oh gosh, from like July, August, September timeframe, I was getting in too early and I was getting whipsawed out. And so what I did to modify that and that's where I was getting stopped out, like sometimes three, four, five, six times in a row. What I then did is said, okay, let's wait, be a little bit more patient, you know, be patient, be prepared. And I would wait until I had a solid level of support, candlestick reversal signal, and I actually started the reversal, and the momentum, the TSI, started to turn back up. And what I did with that is I also changed my buying technique. What I
Mhm.
did was I started taking a quarter to a half position at that at the low point. And then when it bounced back above the 8-day moving average, that's when I would add on the rest of my position. And so what was happening is it gave me a a a a window of where I was willing to get in. And so by be willing to get in this window, actually improve my entries, but also by that time the momentum had shifted. It also improved. Um, uh, it also improved the results after that because my momentum had shifted to the upside, and that increased my profitability dramatically. So Alberto asked the question, "Hi guys, is there any truth to the first 30 minutes of the trading day being called the amateur hour? Personally, I usually wait for 30 to 40 minutes into the session to put a trade on." And so, yeah, Alberto, for a long time, that first 30 minutes to an hour has been referred to as the amateur hour. There's a lot of strong volatility on that. Some traders avoid it. I personally avoid that time frame, partly because of my location in Hawaii, and I don't want to be up that early.
Hmm.
Secondly, is I found that the reason I do that, I wait to trade the final hour of the day, or I trade, um, put in my orders after the market is closed, so it's totally takes the emotions out of it. But I find the final hour of the day, by that time, I know my candlesticks are close enough to being completed, so I know the story. If I try to trade the first hour of the day, the candlestick might look really great, but by the end of the day, that candlestick can look like crap. And then all of a sudden, I've went from starting with a really nice winning trade to being in a losing situation. So I would uh, rather than trying to predict what the story of the day is going to be, I like to let the go in at the final hour where I know what the story is for the day, or at least I'm 90% sure. What about you, Mike?
Hmm.
How do you handle that?
Yeah, so this kind of goes back to what I was talking about before with the working order versus the alert. So uh, Alberto is one of the people in our program. So Alberto here, this is like when you know, like how when I place the working order and I have okay, there's multiple layers of confluence for the entry, multiple layers of confluence for the stop, and so if price does break, the reason why I'm willing to place an order at night and then walk away from it is because if price does break out, and let's say that it does have one of those reversals, there's enough support here where I'm willing to say, okay, it broke out, false breakout, but it's still within that window where it didn't break the pattern.
Right
So
on.
those are more rare. So I'll place those, and if I enter during the first 10 seconds of the day or the last 10 seconds of the day, it doesn't really matter to me on those trades. For the ones where I'm placing the alert, it does matter a little bit more. If we are breaking out right away, then I want to see how we breaking out. Sometimes we will get that initial pop right away, and you need to be Johnny on the spot. Tesla was one of those. This last breakout in Tesla, well, when did it break out? It broke out on December 5th.
Yeah.
That was one where, okay, within the first minute or two, pounced on it because it had the volume, it was breaking out well, and the way that it broke out made sense to get in. Others, sometimes you start to dribble out and the volume is low. Those are the kinds of things that I look at.
Yeah. And the other thing that I've learned, for Alberto there is over the years, my mentor used to tell me, because I had this issue with being patient or impatient. And what he would tell me, he said, Dennis, be patient. He goes, the best trade of the year comes around about every 2 weeks.
Hmm.
So the fact of the matter is, if I miss one, I ain't worried about it. I mean, seriously, I am not worried about it because I know, and I've been doing technical analysis for long enough that there will be a pullback, there will be a sell-off, and so I just got to follow my momentum indicator and my price action, and bingo, bingo, bongo, pow, that leads me to profits.
Right.
That's you know,
And you know what? It also speaks to why people need to learn the basics first, like what you were talking about at the top of the show.
oh yeah,
Learn how to trade stocks first before you start going into options or any kind of advanced stuff. Because what I've seen a lot of people think too is that, oh, I could go and make 200% a year. That sounds great, and then they want to dive into this thing where Their expectation is, this is going to pay my bills, it's going to pay my rent, my mortgage, put food on the table immediately.
Exactly.
And that's not the case. You're just putting way too much stress on yourself to make something happen. And if you're trying to make a trade happen, that's the worst place to be in. You don't want to
Yeah.
try to make something happen. It's presenting itself, and you're there to pick up the bag of money in the corner,
Yeah.
as a famous market wizard once said.
Yeah. Yeah, I agree with that wholeheartedly, Mike, is one of the things that, I know that a lot of people, especially when we're approaching the end of the year, going into a new year, a lot of people have the dream of, oh, I want to become a trader. I want to trade for a living and all that type of thing. And they go, I've got $100,000 saved in the bank and my trading account, and therefore I'm going to start trading for a living, thinking like, but their mindset is such that they're used to drawing. A lot of times they've been in a profession where let's say they draw a check every 2 weeks, and the check is the same amount every 2 weeks. And they know, well, that's what I need to live on. So they basically quit their job, start trading for a living, and guess what? Trading for a living is not like a job. You're not going to get paid the same amount week after week after week after week. It's more like a commission jobs in sales, where,
Mhm.
well, like a couple of weeks ago, I had a really great week, did over $5,000 for the week and all that kind of stuff. It was really great, wonderful. Well, guess what? Last week was a negative 1,000. So, the thing about it is that if our minds, and what I encourage people to do is start to learn how to trade before you quit your job. Get to the
Mhm.
point where your success is such that you have replaced your salary that you were making with your trading before you quit your job. And so what that means is you're going to need a year's worth of work. And it's going to be worth it. It's going to be worth it. But a year's worth of work to basically to analyze what you're doing, apply what Mike and I have been talking about today, apply that to your trading. Um, and then take it from there and say, okay, now that I've done that, then okay, I feel a little bit more confident. And so oftentimes people step out thinking, well, I've got this pot of money, and this is all I need. And in reality, it gets back to that plan of, let's say you are replacing your salary with a by the time, during that year. Well, guess what? You just build up your trading account significant amount that's going to make it even easier when it is time for you to trade for a living. And one of the things about trading for a living is not about sitting there watching the chart all day long or day trading, all that kind of stuff. Not that there's anything wrong with day trading, but what you will find is that I need to sharpen my routine and hone it down to something that fits me. And would you agree with that, Mike?
Yeah, wholeheartedly.
And so, hey guys, I want to basically, Mike has been talking about, we've both been talking about it. I want to basically just bring this up to your attention. Hey, this is
Oh,
Mike's
thank you,
book,
Dennis.
The Trading Mind Wheel, and a great book. And, perfect time for Christmas. And since we've been talking about journaling, we will put links in the descriptions. This trading journal is the AutoPilot trading journal,
Oh,
and
okay.
it's got all my rules in it. But it also has a lot of blank pages and a lot of ways you can basically learn how to trade. And this will be also linked. And since we've been talking about journaling and how important it is, hey, why not start with the best to begin with?
Fantastic.
So, Mike, what one thing, we left, we didn't get to the part about mindset, and so it's give us something to talk about maybe next week. But what's, a couple of things you would want people to just take away from today's session?
Yeah, I think that you've got to do a post analysis. If you want to improve in 2025, take a look at what worked well in 2024. Take a
Yeah.
look at what didn't work well in 2024. just come up with your top 3 things for each of those.
Yeah.
Right? You don't need a giant laundry list, just top 3, and then focus doggedly on those.
Right on.
Right? And this guy's taking. Oh, he just woke up.
Huh.
Focus doggedly.
Dog.
On
Oh
those
my
top
gosh!
3 things.
I can't believe you said that. No.
This is Coco, by the way.
Yeah, Coco.
Coco's been
Coco.
good. He's been sitting here the whole time. Not a
Yeah,
peep out of him.
well, Coco is clearly your dog. I mean,
Hey.
right? And so,
Yes, he is.
so that's awesome. Part of the takeaways that I would like people to just walk away with is, one, find your pattern.
Mhm.
Find your stock pattern and just become so great at that pattern that you are sure of the pattern, but then you're confident in your ability to execute that pattern. Now, there's several different patterns you want to be aware of. There's the chart pattern, but then there's also the emotional pattern, which the emotional pattern has a lot to do with what you believe. So the underlying foundation is challenge what you believe to make sure what you believe is propelling you towards your goals as a trader rather than repelling you away from your goals as a trader. So that was really good. We should record that, huh? Anyway, so okay, guys, we'll say aloha, God bless. Again, suggest to us what you would like us to be, talking about on future episodes. We've got some really great guests. We've got a great guest coming up in January, Mike. That is
Jason
Shapiro.
Shapiro.
Who's that?
Jason Shapiro.
Jason Shapiro will be joining us in January, and
January 13th.
And then Kathy O'Connell is going to be joining us later on. She's a really great trader using the IBD system. And then if you'd like us, Mike and I, to talk a little bit about trading options or some of the other things that we do, just let us know. Send Mike a note over on the Discord channel or message us on Instagram or YouTube. And again, I ask you, do one thing for us. Let other traders know that Mike and I are putting out really great information about how to debunk market myths every Monday. So, aloha, Mike, and God bless, my friend.
Take care.